Hey there, okay, here's another video, and this one's going to be about the ascending and descending triangle, and this is a continuation pattern. Alright, so first of all, let's get you a little example out. Okay, first of all, you need to see an established trend. Okay, so we can see that the trend's going up. Okay, and then eventually you start seeing it make newer lows. Okay, so ideally the way it's supposed to look is that this bottom line is supposed to be as much as possible a straight line, and this top line is supposed to come down at an angle. Okay, and then it's basically, although I said it's a continuation pattern, you might think that this should actually break and go up even more because the general direction was an uptrend. With all that being fair and well, that would have been a good logical answer. But however, we've got higher lows here. Here's a high, there's a higher high, then a higher low, another higher low, and then another higher low. So now the general direction is down. Okay, so this is going to be a continuation pattern once it breaks out of here. Now where is your TP going to be? Okay, now these are very low risk trades. Okay, now they don't always work out in your favor, but when they do, they can turn out to be very low risk trades. Alright, you would basically enter on the break, okay, and you would put your stop loss either at the first peak or the second peak of the high low. Okay, so this one here will be your stop loss, and the distance from here down to this line, if this had, like, say 3 grids inside it, then you can expect to get 3 grids out of it on the way down as well. Alright, now that's the descending. Now the ascending is basically the opposite, it's the other way around. Okay, but this time you're going to be coming in from a downtrend. Okay, and then the bottom parts of it is going to basically rise. Alright, then you get your line tool out, and this one's coming in at an angle like that. Calculate the distance between that point and here, which could be 3 bars, and then this should actually break and go up 3 bars or 3 squares of the grid. Alright, let's see if we can find an example on the chart. Now this might be a little bit harder to find straight away, so okay, this is similar. Okay, there's one low and there's another low, so there's our straight line right there, and here is basically our line. Here is our initial trend going up, and this is making new higher lows, so therefore the trend is coming down. We calculate the square grids. Now your square grids are going to be different, alright, because I'm using a resolution of 600 by 900, I believe. This screen window that you're actually seeing now is 1280 by 720. Alright, but this is what my pixel screens are, and my recording screen is this. So yeah, so you would have to take a look, do some back testing first. And what I mean by back testing is basically go and have a look for see where these patterns have emerged before. Okay, now you can see where this breaks. Alright, it does take a while. I mean, it's sort of kind of broke around about here, and sorry, around about here, but it took quite a while for it to actually come down our 4 squares. Alright, so there was one. We might not actually use this. We'd probably use this line if we wanted to really be ultra sure to wait for this next line to be broken. Okay, because let's just take that off quickly. You can see how this line came down and it actually closed there, because we actually drew our line from here to there. I mean, if we could have essentially actually let's take that back, and we can take a revisit at this, and we could say, okay, well, here's a low and here's a low, so we could essentially possibly just join all of these ones up here and then draw that line down to there, and then calculate 1 2 3 4 5. Alright, on the break, well, it's actually broken here as well, but it's also broken there, so either way, 1 2 3 4 5. Okay, and there's the fifth one, it gets hit, and there's your TP. That was a break from 161.30 down to 159.58, so it was almost 200 pips there off the 1 hour time frame. And that, if we got in, I don't know, I guess we probably would have taken one of these earlier breaks, if we could be honest. It all really depends on how you're looking at things and how much analysis that you've done. But essentially overall, you know, it would have been like about a 200 pip gain over probably a period of around about 12-18 hours. Alright, so that's that one. Let's see if we can find some other examples. I bet there'll be some people be able to spot these a lot quicker than I do. Again, this is not really something that I use, rising wedges and stuff like that. I'm more into candle patterns myself, and you know, support and resistance levels, which is what I've been mainly focusing on. Okay, here's one. I guess we could take it from those two lows. And this is dot 1, 2, 3, 4, 5, 6 breaks there. 1, 2, 3, 4, 5, 6, and the TP gets hit right there. That's in around about 12 hours or so. And that was the declining wedge right there. So there you have it, really, basically. Not really much to it. Maybe we can just give you maybe another example. Here's like an inverse rising wedge. Calculate the distance from the top to the bottom. It's 1, 2, 3, 4, 5, 6. Breaks right there. 1, 2, 3, 4, 5, 6. Oh, coincidentally, right on that point, it goes back up again, which is pretty cool. Alright, so there we have it, ladies and gents. Alright, so play with that for a little while, and I will see you very soon in the next video. Bye for now.